This is Barry Zalma speaking for Claim School Incorporated with another true crime of insurance fraud story. This one, video number 61, is called Don't Drive Off a Cliff. It just may not be covered. Jimmy wanted a new pickup truck in the worst way. He decided to deliberately wreck his old car, make a claim against his insurance policy, and use the proceeds to buy a new F-150 pickup. Jimmy disclosed his plan to his best friend, Winifred. She agreed to help as a lookout for oncoming traffic on the night they chose to destroy the car. Jimmy, with his friend Winifred as a passenger, intentionally drove his pickup off the road and over a small cliff at 35 miles an hour. He did not let her out of the truck to be his lookout, as planned. He thought it would be more realistic a claim, one that would not be questioned by his insurance company if he and Winifred were in the pickup with him. As planned, the pickup did not survive the crash. Unfortunately, neither did Winifred. Several lawsuits followed as Winifred's heirs sought someone to blame and pay for her death. They knew and did not care that she had joined in Jimmy's plan to defraud his insurer. They concluded there was nothing wrong with what Jimmy was trying. Stealing from an insurance company was fine. Just don't kill our girl Winifred. They concluded Jimmy was negligent because he could not defraud his insurer without killing Winifred. They decided to get their share of the insurance money. They were going to join in Jimmy's fraud and take even more money from his insurance company. They first sued Jimmy. His insurance company settled for a generous sum. It was unwilling to fight the claim despite the obvious contributory negligence defense and the fact that the claim arose out of an intentional act designed to defraud the insurer. Next, they sued Nissan, the manufacturer of Jimmy's pickup, claiming the seatbelts were defective. Nissan's insurer also paid some money to avoid litigation. It was just too expensive to fight a dead young woman's heirs, even if she was involved in an intentional act of fraud. Dissatisfied with their recovery, the heirs turned to Winifred's insurance company, Farmers and County Mutual. The policy sold to her provided that it would pay all damages which an insured is legally entitled to recover from an owner or operator or an underinsured motor vehicle because of bodily injury sustained by an insured and caused by an accident. The heirs argued that they were entitled to underinsured motorist benefits under the Farmers and County Mutual policy because Jimmy was underinsured. Furthermore, they claimed Winifred's death was accidental. Farmers and County Mutual's response was translated from the lawyerese. Give me a break. When the case went to arbitration, the insurer explained to the arbitrator that Winifred accepted her ride in a truck she knew was going off a cliff. Her demise was tragic and unfortunate, but was not an accident, as the term is commonly understood. The problem for Farmers and County Mutual was that over the years, courts have not construed accident according to its plain and ordinary meaning, at least not in the context of liability and UIM policies covering injuries caused by an accident. The courts have generally held that an injury is accidental and hence covered by such a policy unless the insured actually intended to inflict the injury. It is not enough, the courts have said, that the insured or the underinsured motorist acted intentionally, even illegally, causing foreseeable, if not certain, injury. If the injury itself was not the insured's or the underinsured motorist's goal, then it was accidental and there is coverage. The heirs argued that Jimmy and Winifred intended to destroy the pickup, not Winifred. The death, they argued, therefore, was accidental. In the case Winifred's heirs versus Farmers County Mutual Arbitration, Farmers and County argued that interpretation of accident in liability policies is hyper-technical and legalistic and should not apply the same term in UIM policies. The arbitrator ruled in favor of the insurer. The heirs sued, lost to trial court, then adopted the ruling of the arbitrator. The heirs appealed, and a court of appeals agreed, saying that for UIM purposes, an accident is an event that from the insured's and the underinsured motorist's perspective is unforeseen, unintended, unexpended, or the like. An injury is not accidental, the appellate court explained, if the injury-producing event was intended or expected. It is not necessary that the insured intend or expect the injury. The appeals court went on to hold that the wreck that took Winifred's life was not an accident because it was not unexpected or unintended from her perspective or from the perspective of Jimmy. Quite the contrary. She helped to plan the wreck. Accordingly, Winifred's heirs were not entitled to UIM benefits under her policy. The Supreme Court of Oregon accepted the case, and Winifred's heirs and the insurer, believing there was still an opportunity to recover on the UIM policy, settled the claim to avoid legal expenses and the possibility of making bad law. What the courts, dealing with the technical definition of a broad and multifaceted word, accident, are ignoring is that every part of the claims presented by Winifred's heirs was an attempt at fraud, just as bad as Jimmy's original plan to destroy his pickup to get money to buy a new F-150 pickup. People who do wrong should not profit from it. Paying Winifred's heirs for her death while admitting that she was intentionally a part of a criminal act is the same as the police paying the heirs of an armed robbery who is shot to death by the police in the course of his armed robbery. If our courts continue to honor criminals and their heirs for causing their own injuries, the system will destroy itself. If insurers continue to pay to settle this type of fraudulent claim because it is less expensive than fighting to a conclusion, all of us who buy insurance will suffer. Every person who buys insurance should shout to their insurers, "Give us a break." You might also want to read today's blog posting, which will reveal that the word accident and California's Insurance Code Section 533, which deprives an insured of coverage for a willful or intentional act causing damage, might give a break to those of us who buy insurance and seek to avoid fraud succeeding and willful and wrongful acts succeeding by getting them insurance coverage to protect them against their own wrongful acts. This video was adapted from my book, Insurance Fraud Costs Everyone, which is a supplement to my 2-volume treatise, Insurance Fraud Second Edition, and to my newest book, Insurance Fraudsters Deserve No Quarter, all of which are available from Amazon.com as both Kindle books, paperbacks, and hardcover. Thank you for your attention.